Welcome to Market Chasers. Today we're going to go over some wild stock market gains and losses from posts made in the WallStreetBets subreddit. Be sure to subscribe for more and let's get into it. First, we have a post by user tastywaves who shows us that he purchased 2,815 Blackberry $15 strike price call options a few weeks ago that expire on June 18th for a total cost of $100,000. He shows us he's since lost $49,000 or 50% of his initial investment in unrealized losses. Blackberry has been slowly selling off, lowering in price since its massive spike in late January around the time that Gamestop was spiking. In order for this poster to regain his initial investment, Blackberry would have to rise 80% in a 1.5 month time period. If he's still holding these contracts on June 18th and Blackberry is not above $15, he will have lost his entire invested capital of $100,000. Blackberry has been trying to reinvent itself and move away from being a phone company, so perhaps in the long run, it will rise significantly, but the chances it reaches $15 by this date are becoming smaller as each day passes. It's far from impossible he regains his money, but if he doesn't cut his losses, he may lose more and more. Here we have a post by WallStreetBets user named Ancelis titled, "Sometimes timing the market works. Made 50K on Microvision in 6 days, shares only." This log of his buys and sells shows that he purchased roughly 3.2 thousand shares of Microvision for $10.50 on April 20th, for a total cost of about $30,000. MVIS subsequently spiked all the way up to $26 within a week, at which point he sold, netting him a massive $50,000 profit in just 1 week off of a $30,000 initial investment. This trader managed to time the market almost perfectly as he purchased just above the low on the 20th and sold a few dollars below the high on the 26th. He got out just in time as MVIS tanked over the subsequent week, dropping from $26 all the way down to $14. Next up, we have a post by NK Ultra titled Tesla April 30th 1000 Strike Call Options, or How I Learned to Stop Thinking and Hate Money. This screenshot he provided shows he invested $9,000 into $1,000 strike price call options expiring on April 30th, a few weeks ago. Sadly for him, Tesla had stayed below this $1,000 strike price and is currently trading around $700. This play required Tesla to jump approximately 40% in just a few weeks in order for this trader to just break even. So this was a highly risky play that could have potentially resulted in a lot of money if Tesla did skyrocket like it did several times over 2020. Sadly, this time it did not play out as Tesla has been consolidating in price recently, trading sideways for several months now. Long term, Tesla will likely rise, but in this instance, it was just too short of a time span this trader was betting on. Here we have the post referenced in the title of the video by user Start155 titled Quick $3.2 thousand in 2 minutes, scalping snap puts. The accompanying screenshot shows he purchased $10,000 worth of Snapchat $63 strike price puts that would expire on April 30th and sold them 2 minutes later for 30% more for a $3.2 thousand gain. He was trading these options on the day of expiration, meaning the price action of the stock has a massively leveraged result on the value of the option. In this instance, Snap must have dropped slightly, giving a large increase to the value of the option, in which the user quickly locked in his gains. If Snap's price had gone up, however, he could have also lost a significant amount of money, so luckily it went in his favor for a really quick gain. Consider subscribing for more, and thank you for watching.